because of the entire BTO system, we need to make houses affordable for next generation. That's why we create BTO at a discounted rate. So this discounted rate inevitably will have to make the prices go up for private property. Last time I always ask myself, right, why do we always have to suffer through inflation? Right? So if I don't have to suffer through inflation, then actually I will feel that I don't need to work so hard. Because I can buy the same number of goods, right? If there is no inflation at 0%, right? Actually the economy will perform worse. Because when there is no inflation, you can buy your goods later. There's no incentive to buy now because you know it's not going to become more expensive. You will actually introduce the mechanism of savings more. So when more people save, people don't spend, the money don't circulate, there is no revenue, there is no income increase. Sort of like the sweet spot is a 2% inflation. So it inflates slightly, have the money flow, but it cannot be too high, such that, you know, like everything becomes unaffordable.
Feeling like a brand new me. For the very first time, I'm not where I'm meant to be.
Okay, we're gonna do the sentiments of new launches, and of course, market sentiments, buyer sentiments. We're going to talk about some of the performance of new launches this year. And Rong, why don't you bring us through like some of the headliners? Let's go.
Then you must click for me. Okay, generally, I think like this year launches have been performing very well, especially before the Trump tariff saga. So most of the time you will see 70 plus, 99% sales, 90% sales. All right. Those that usually do not perform as well are the smaller projects. Of course, after the tariff stuff has settled down, right? You also see that during that time period, there was no major launches. And I think like the developers also time it to make sure that to allow the market to sort of like, you know, like balance out the concern over potentially crashing of the market, right? So because this one 10% shaving of the S&P 500 index due to all the tariffs. But in short, you just go to a summary table, you go down all the way. These are all the performance of the launches this year. So you can see overall is doing very well. You see that most of the launches are doing 86%, 90%. But I think most importantly is sometimes when you look at launches that are at like 50% plus, for example, maybe one Marina Garden, 38% sold, right? It doesn't mean that it doesn't perform well because it actually moved 356 units. I think over a weekend launch, if you can move more than 300 units, is considered a good sale for the developer. Why is it only 38%? Is because it is the third biggest project launch this year at 937 units. So if you see most of the project launches, they are averaging about 300 plus units. So of course, it will be easier to get 90 plus %. So they basically move similar number of units as compared to the smaller projects. But overall, I would say that digestion rate usually, if you are in the outside central region, you are in the rest of central region, usually it goes well, it's quite popular. Right, Bloomsbury is the only one that maybe did not perform so well due to the lack of MRT station. Linden Woods is a similar location, right? Similar unit, number of units, but it moved almost 95% because there's an MRT. Yeah. CCR launches, I think are those that usually you don't have such a high sales rate as compared to your OCR and your RCR. And I think like they attract a specific group of buyers who really want to stay in a very prime location. So I think the target audience is a little bit smaller, especially now that there are no foreigners as the majority buyer nowadays because of ABSD.
Yeah. What do you think? I mean, like, since we're on the topic of new launches, then maybe let's adopt like a buying point of view. Will the fear of developers cutting prices in the next 2 to 3 years from their balance unit happen? Because I think that's one of the fear that a lot of buyers will have. Is like, for example, let's say if I see a project, okay, and I recognize that is if I can clear 300 units during launch, it's considered very good take-up rate already. But what about the absorption from the ground from a buyer's perspective? Because sometimes as a buyer, maybe I will fear that, hey, will Singapore be able to absorb all these units or not?
I think like 2 portions to that, right? So if you are looking back at a trend where I would say that let's say in like 2015 to 2017, that kind of region where new launch actually slowed down, right? And same thing, but the same question, right? Okay, developers are reaching their 5-year timeline of ABSD. So are they going to cut prices so they can move the units? And I think like from the past, what happened, the developer choose to do, right, is either they choose to pay money to extend the deadline to sell the units, or they actually repackage it, sell to a fund, all right? Or some, when there's only a few units left, sometimes, their own directors
They
actually
buy
buy as an individual purchase, they pay ABSE over one unit, right? So there are a lot of ways. I think like for reputable developers, they want to make sure that rather than trying to save money and cut costs and all that, right? I think they want to maintain a reputation. So I think like all that, they were unlikely to do so. Some developments will not have an ABSE timeline one. Yeah. You know how come some don't have ABSE timeline?
Because they're under, let's say, a CBD program. They have that commercial element.
Yes, as long as it's not pure full residential land site, they don't have that timeline, then you don't have the ABSE deadline as well. And I think developers now are already very smart. Why is because, right, with the introduction of harmonization and also understanding how like land bid prices are going up, I think developers are very focused on making very effective layout. So you no longer have big balconies, the bay window era is over, then change to big balcony, then change to big terrace, then change to like loft. All these are all gone. So all this, in fact, right, when you have very effective layout, right, what it happens, right, is that it brings the price quantum to be very attractive. That's why River Green sold very well, because you have like 900 plus square feet, 4-bedder. Yeah, your quantum is like, can't remember the quantum already. 2.7 million, 2.9
2.9 to 3.
2.9 to 3 starting from price.
Starting from 2.8, I think.
Starting from price, right? Your 3-bedder starting from price is close to 2.45 million. But of course, then that's where you can get a lot of people excited. They come in, then averagely they still land at a 3130 per square feet, even though it was like 25xx for the 3-bedder, 27xx for the 4-bedder starting from. Yeah.
In fact, I think last year when harmonization take into effect, a lot of people are very worried
that the price will drop.
Yeah. No, or like they are worried about the PSF being higher. But it seems like now the developers has sort of like, I wouldn't say like taken advantage of this harmonization, but it's like they became very creative to make sure that the quantum is kept low. It has sort of worked into their favor because they can attract buyers from all parts of the city. I mean, for example, you look at River Green, somebody that's considering a OCR.
RCR.
They might think that, oh, this is a great chance for me to live in Orchard, 4-bedder, below 3 mil. I can live in Orchard. So it's like a great chance for them to enter. But of course, certain developers, let's say if they want to maintain that luxury status, they will still want to respect the fact that luxury buyers want a bigger size. But I think the strategy is like, certain CCR buyers, maybe certain CCR developers are trying to absorb the OCR, RCR market into CCR because we don't have a good pool of foreigners now, like what you mentioned. But maybe
even their children also bought 4 units. So I think some key things will be, I think for new launchers to do well, they must select a strong positioning based on their understanding of the market. So you either go very big, such that, you attract people who really want the size, or you go extremely effective. So that you can actually have some price quantum advantage and attract, other buyers from other locations.
Right.
So which was what River Green did so well.
So which is like 80%. Let's have a look at the macro market first. I mean, just to answer that question just now is like, will we face a risk that maybe all these launches, right, in terms of their inventory, cannot be absorbed? So let's have a look at the macro market to see the state of health. These are, of course, the assets as a proportion of household wealth. I mean, it's on quite a healthy level compared to pre-2000. I think pre-2000,
the Asian financial crisis.
Everybody was like extremely aggressive because there was no cap on LTV, ABSD on your second, third, fourth property. But it seems like now, Singaporeans are keeping maybe 50% of their household kind of like worth in terms of real estate. Then maybe let's have a look at this as well. Let's have a look at this chart. Okay. In fact, I think the topic we talked about previously was that does the 4 years cooling measure has any impact? I think there's not much impact because you can see from this orange red bar chart, the amount of people that actually sold within 3 years is extremely low. So I think that cooling measure was, effectively sort of like disappeared into thin air.
There's no impact because we actually been through that 4 year seller stamp duty phase before, then we cut down to 3 years and now we're just going back. And I think like generally wise, what the government is trying to do is when we extend the seller stamp duty, we reduce the number of transactions, hopefully lesser transactions, right? With the volume dropping, then maybe the price don't escalate so fast. That is the main rationale. And I would say that, think of it this way, right? The cooling measures is like your antibiotics like that. The first round antibiotics is going to be very, very effective. Then the next time you keep consuming, it becomes less and less effective because the resilience of the market, I mean, it's a positive bacteria. I mean, the resilience of the market is so strong that anything that are tweaking based on like past cooling measures, right, will not have a dramatic impact unless you really come in with something new. Which is not easy also. I think like most of it has been exhausted. But nonetheless, the government can be creative and create something like no problem.
Let's talk about this as well. This is very interesting. It's the purchasing power in Singapore in terms of financial assets over debt. So that is the blue color line. Then this is basically the financial assets owned. I think in terms of debt level, it's actually not as high as we imagine it to be. I think one of the reasons is also because like the value of our property has risen. So for example, somebody that bought a property maybe in 2020 until now, they are sitting on a lot of profit.
Yes.
So in terms of their outstanding debt versus the current valuation, it's actually, it has dipped significantly. So I still remember like this year I actually traveled to like Hong Kong and China. I realized that the power of real estate over the morale of the population is extremely important. I can feel that the morale in Hong Kong has dipped, the morale in China has dipped based on the people I spoke to, because it seems that in Asia, the culture is that we plonk in most of our wealth and our active income to leverage and purchase a real estate asset. But when you always wake up on a day-to-day basis and you know the example, if I bought a property $2 million, but now it's only worth $1.5 million, your natural morale will drop. Like you know that you're losing money and you know that it's very hard for it to U-turn and it might take 10, 15, 20 years to U-turn. So naturally speaking, I think the population's kind of like drive is very different. So compared to, for example, Singapore, year-on-year basis, at least we don't see much deflation in terms of real estate, although there are properties that stagnate in value. But naturally speaking, I think when people see profit in their current property, they're sitting on profit margin, they have a choice to divest it, buy something stronger, or they have a choice to divest it and retire and stuff like that. So it seems like in Asia, the culture is that we tend to put our wealth a lot into real estate investment. What do you think about this morale portion?
I mean, I absolutely agree. Like, I mean, if you have, it is not like Singapore real estate is very cheap, right? So when something is low in pricing, then of course you wouldn't be too upset if you like lose a lot of the value in it, right? But I think Singapore context, right, it is very interesting because I think it is uniquely Singapore. Only one country operates like that, and the long-term trend is that based on the economic policy of Singapore, right, the prices of property will go up steadily. Okay, so a couple of things that is different. Number one, we have full control the government has full control of when to sell the land. What is their reserve pricing, right? So that already sets the basis of like how much will future condos be launched. Okay, so as long as like they can control this, they will have a price mechanism to not lower down the pricing. Because at the end of the day, it will not be to the incentive of the government to make prices come down. Because if your wealth comes down, the morale comes down, the entire economy will spiral. What the government requires is to make sure that it goes up at a steady pace. And hence the cooling measures make sure that it is not overly heated. We don't have foreigner money to come in to actually jack up the pricing. And then in the end, when this money leaves, the main victims are going to be Singaporeans holding on to these assets. HDB is a very unique market. HDB lays the entire foundation of the private property market wealth. So if you think of it this way, it is like a foundation. 80% of the owners own HDB. And because of the entire BTO system, we need to make houses affordable for the next generation. That's why we create BTO at a discounted rate. So this discounted rate inevitably will have to make the prices go up for private property because you see, you buy a property 300k. MOP is worth $600,000. And these people are young. And if they are doing well in their career, then they think, hey, I have this 300,000 equity that just appear and I can use this to shift it to another form of asset class or investment, right?
Yeah.
So where did this money come from? This money came from a social policy to make sure things are affordable, right? So everything stacks up to have the money flow from you call it grants or you call it subsidies into the primary market, into the CPF, which can allow certain Singaporeans who are positioned well and let's say they are more into, managing their financials to consider private property as one route to grow this money, right? Yeah, so I think it is very unique. So all these mechanisms, land pricing, land availability, HDB, CPF policies, grants, subsidies. And then from an economic perspective, right, there's a reason. Last time I always asked myself, right, why do we always have to suffer through inflation? Right? So if I don't have to suffer through inflation, then actually I will feel that I don't need to work so hard, because I can buy the same number of goods, right?
Yeah.
So there was a thing that they ran. I don't know whether it's a study or whichever, right? Is if there is no inflation at 0%, right? Actually the economy will perform worse. Because when there is no inflation, you can buy your goods later. There's no incentive to buy now because it's not going to become more expensive. You will actually introduce the mechanism of savings more. So when more people save, people don't spend, the money don't circulate, there is no revenue, there is no income increase. So it's like
and businesses don't do well.
Yes. So the sort of like the sweet spot is a 2% inflation.
Yeah.
So it inflates slightly, have the money flow, but it cannot be too high, such that, everything becomes unaffordable.
Yeah. Sometimes when you look at this behavior of government wanting to calibrate, whether it's land prices, cooling measures, the speed of people being able to buy, sell properties, or whether are they taxed. I mean, in certain countries, there's capital gains tax. We don't have it here, but we have so much restrictions, right? ABSD, second, third property, LTV loan and all that. But when you look at a country perspective versus like how people run a business, it's actually quite similar to a certain extent, is that when you don't let the people feel that there's growth in their wealth, they will leave. So for example, let's say in the business, you have, let's say 50 employees. If on a year-to-year basis, you don't give them promotion, career progression, increment, you don't let them feel that their wealth is progressing, they will also leave for greener pastures. Hong Kong, a lot of people has left. China, a lot of people has left based on the latest Henley and Partners Wealth report. And I think a certain portion is that they feel that, of course, there's economic reasons and all that, but their asset prices has dipped. And of course, now you see Dubai is growing extremely strong, attracting a lot of population. Real estate is one key factor, is growing very strongly. Singapore has prospered through the rise of real estate growth in prices as well. It has attracted a lot of people here to use real estate as a store of wealth. So I think when property prices stagnate and it doesn't grow on a gradual basis, people will not feel excited about the country. So I think it's a national policy.
Yeah, agree.
Well.
So as in when money flows out, then of course the currency becomes less strong as well. So over time, it might depreciate against other stronger currencies, right? So I think that's where SGD does very well in that. Yeah. So usually when the currency is strong, I think there is quite a correlation to the entire economy doing well, your prices are doing good, etc.
Yeah, let's do two kind of scenarios. I think.
Okay.
One of it, I need your help, Rong. So, we always talk about the fact that actually if a developer is wanting to protect their reputation, right? Yes. They will do their very best to actually launch it at the right price. Yes. I think the 5 years ABSD is fantastic in the sense that it will really allow the developer not to hop onto the land. Because they have by all ability to hold onto the land, to wait for it at the most opportune time to sell at a very high price.
And then in between, they can just rent it out like past developers.
Correct. And now they are sort of motivated to sell it within 5 years. They have to launch at the right price. And if they launch too high, the market cannot absorb. It's like free marketplace principle.
It also sort of helps to make sure that the developers bid in a sound manner because they have a timeline to sell. They must make sure that the price makes sense from a business perspective to digest and let the market absorb the full inventory. Yeah,
so in a way, our government is extremely smart, right? So for example, let's say you look at this from like a 5-year horizon, and let's say this is the 5th year mark, right? This is 0 to 5 years. Basically, for example, let's say if the price is launched correctly, and let's say if it is launched over here, all right? Let's say 1 year after they bid for the land, after they crafted the whole project, they launch and then they manage to sell, let's say 60%. Most of the time, once they have cleared a certain percentage, they become more confident in the sense, right? Then they will not reduce price. They might gradually increase price. Then maybe at the tail end, when they're 90%, they will just hold on to the price. We always share with investors and buyers is that actually this is like the developer helping you to raise price even before you hit TOP in a sense, right? So at the point of TOP, you already have one push upwards from the launch price. So some people might still buy the balance unit because maybe by then they are in the right season to buy because they have just sold their place and they really like this project. They miss out on the initial launch, but at this point of buying, even though it might be plus $200 PSF, but comparing to what is available out there, it might still be worth it.
Yes,
okay,
that's right.
So then at TOP, maybe you have another push within the next 1 year because a lot of people are selling and all that. Okay, so let's say the scenario of somebody that goes into a development with good volume, good traction, developer maintain price. What about buyers that unfortunately go into a project that they bought at this price range, developer sort of panic, all right? And then they start to sell the balance unit here. And they are about to hit TOP already at this stage. So maybe, for example, there's 1 year left, but they really want to clear it. So you let's say, for example, somebody bought like $2,700 PSF. Then while it's reaching TOP, you realize that developer actually give us some star buy and start to sell this at, let's say, 2004 PSF. What is your advice for this group of buyers? Do you have any advice?
For
this has happened before in the history.
Many times, but I think like you should buy right lah. Buy right with the correct entry, understand the exit audience, using frameworks, then you won't be put into this kind of position. So you have many products that went through this before. So I think if you are somebody that is at $2,700 per square feet, I think you ask yourself, what kind of buyer are you? Are you the lifestyle buyer? If you are the lifestyle buyer, then I think in the first place, you're attracted to the project, not from a valuation, investment standpoint. You probably don't really need the property to appreciate, right? So just enjoy the location, enjoy what it can offer you from a lifestyle perspective. If today you are somebody that originally invested, so we have seen sometimes this cycle of U-turn can take 8 to 10 years just for it to go back to the same pricing. Ideally wise, it sometimes makes sense to just take the loss. It's considered a form of like stop loss. You cut loss, right? You take the loss immediately. Many people will hate doing this because when you sell, you are effectively telling yourself, okay, I made a wrong decision and you lose the money. As long as I hold, there's a chance that it will go back up, right? This happens in the stock market, any form of market. So cut loss, switch to a better opportunity because I think in real estate wise, time is the most important. Your best cycle is age 30 to age 45 and most people with MOP, maybe they start at 34, 35. So effectively, one cycle is about 5 years. You have 3 good cycles. Between a couple, you have maybe 6 max. Yeah. If you stay over too long and cannot do anything, it doesn't appreciate, it might make sense to cut loss.
Yeah, so let's go through the mind of an investor that came in here. For example, somebody came in here, right? Then maybe this project takes like 3 years to TOP. 3 years. So you bought it here at the launch, 2007. So what goes through in your mind is that, okay, hopefully developer will maintain the price and then sell maybe 2.8, 2.9 towards TOP. But then, when it's about the TOP, you realize that the developers start to clear maybe the balance 10% at this price. So naturally speaking, you might be thinking, oh, I have been sort of like, be in a disadvantaged position. So naturally the mindset is that, okay, hopefully all these people at TOP in 1 year's time, at least they will try to sell at 2007 because they want to make like $300 PSF and hopefully you can go back to some equilibrium. So that's the first phase that you go through. But maybe, example, if that unfortunately didn't happen, like what you said, then you have to measure what season you are in. Because if by the time in TOP, your earning power is getting stronger, you saw like a bigger property, a landed or a stronger 3-4 beta launch, and you just keep waiting and waiting, which has happened multiple times before. Because when we look at the seasons, I realized there's a few key pivotal seasons. One pivotal season was the 2013 TDSR season, which we saw very clearly. Developers position the bigger square footage units. And then after that, they went into really quantum square footage. And all the 3-bedder shrunk in size, 2-bedder shrunk in size, right? So last time 2-bedder was like 1,000 square feet. It shrunk to like 700 square feet. Then 3-bedders was like 1,000, 3,000, 4,000. Then it shrunk to maybe like 1,000 square feet. Actually, I don't know what do you think, Rong. I feel that now there's also like a new season. Is the harmonization.
Is exactly the same thing.
Right. It's like pre-harmonized. Some of the launches that are pre-harmonized, you can see that the sizes are bigger. Not as critical as last time, but it seems like now there's a distinct difference between pre-harmonized and post-harmonized. And I was just thinking like, what will be the behavior of these two type of properties in the next couple of years? What do you think?
I think from previously the 2013 TDSR, where now everybody's budget is limited by the income, right? Because MAS mandated that all banks use the same way of calculation. And this happened to be era of like the huge outdoor space, a huge balcony. It's very easy to string the size, but in terms of effectiveness, you don't sacrifice too much. Right now, I think from already moving to a quite effective layout, now going on to post-harmonization, we do see more interesting things that we never thought of before.
For example?
900 square feet. Last time we wouldn't think that you can actually put in a 3-bedder and then plus a good storeroom. And nowadays, just that how they cut out like weird walkways, they cut out areas that are not so important. So sometimes some buyers come in and say, hey, how come you don't have like a proper outdoor yard space like last time? Because this is probably the least functional area that you can easily cut out to create more space so you don't have to pay maybe like 200,000 for a drying of clothes. You can just have a dryer. That's one. That's of course, you also probably progress to having dryer as one of the scenario. Of course, expensive clothes cannot use dryer. You just dry clean. Or you hang your clothes right in the balcony, etc. and all that. So because I think like everything is so premium, the effectiveness layout, right? Same thing has another impact on quantum play. That's why, for example, River Green is that you can go into the more central kind of location, core area, but you realize that, hey, I'm actually paying the same or very close to sometimes the OCR pricing, and that's why they did well. Yeah. So the sizing is a bit different from Promenade Peak, which is just next door.
Yeah. And I think developers are like really making the facilities feel so good.
Yes.
That even though your unit is small.
Yep.
But firstly, I think the harmonization education that buyers are getting is that, okay, I don't have to pay for EC latch anymore. And I'm really getting more efficient sizes. Then let me go downstairs and enjoy all the facilities because I'm sort of buying into that project. Yeah, rather than just within that square footage in my home.
The 2013 era was also a time where developers really make sense and build a lot of big aircon ledgers that you even, you know, like your compressors probably is only taking up 60% of the space. Then you have so much more empty space.
Yeah.
And I think like by just taking everything out, developers will decide how much space they want to build the aircon ledge because they cannot charge the audience for it. So if you want to have an efficient one, you can do that. You want to have like a bigger one, you can do that. So I think this is great. And you are right to say that developers focus on like facilities. So hence you can see that usually project with decent land size, you know, they do have a very strong attraction factor. The digestion rate is higher because families, you can have a place to exhaust or I mean in a nice way, entertain your kids. Yeah, downstairs.
Yeah. Yeah.
And actually the U-turn, right? I would say that generally the behavior only happens for CCR properties. It usually doesn't happen much for OCR and RCR properties where the digestion rate is already high. And that is also because developers selling OCR and RCR, right? They are selling to thinking from a HC upgrader standpoint. They will already have proper pricing strategy right from the start. Whereas in CCR, sometimes developers want to go for the luxury positioning portion. So they add on like interesting architecture, they add on concierge service. So all these are X factor that, let's say for example, if it doesn't hit well with the audience, then there's no choice. So you have to just reduce the pricing because it was not, the market did not position or receive it at the kind of pricing element.
Yeah. I absolutely agree. I mean, most of the star buys that you will see, right, is largely CCR properties. And of course, they are also caught halfway by all the ABSD.
And foreigner ABSD.
Yeah, like suddenly if the government, when they just plonk in a 60%, they are just caught off guard. Yeah, so the demand sort of instantly drop. Let's talk a little bit about what is going to happen in the next 2 months. Since now the Fed rate reduction policy is like a super hot topic. So it's like September, October. It seems like the rate cuts will definitely happen. I mean, based on what has already been hinted at the latest Fed meeting. So what do you think is going to be the impact for the next half of the year? Now we are at about 1.9% right? Mortgage interest rate.
1.75.
1.75 latest one.
1.75. Wow. Every month is dropping.
Which bank is it now?
SCB, Maybank, you can 1.75%. And other banks, you can see how you can negotiate with them.
So if let's say we got 2 rounds of rate cuts, do you think we will see 1.25?
Probably not until 1.25, but I think at the 1.5 plus range is quite in the horizon, because technically speaking, we haven't had any proper rate cuts for a long time already. But yet, I think like from a Singapore perspective, we already adjusted our interest rate mechanism downwards, right? So we have already sort of like in the future. So I think with more rate cuts, I think it will not like drop it significantly. If let's say, for example, our interest rate has stayed consistently at 2.5%, under 3%, if there is a significant rate cut, I think like the interest will drop significantly. But because it has already been sliding down, every single bank is sliding down, we are now finally back at the under 2% kind of era, when everybody say, oh, under 2% I want to buy, right? So that would be the best time to buy, because now your financing cost is even lower.
Yeah.
And when you suffer very little interest erosion, then it is way easier to make your money work better for you.
Yeah. So of course, there's a few mechanisms that will happen. One is, of course, interest rate. Singapore is always keeping very closely tied to US. Interest rates, I think it is like resuscitation factor to a country. Like now, US interest rate is averagely about 6 to 8%. The people that has bought, and US is very different now, because you can go for 30-year fixed rate at the point of purchase, and once you purchase, it lock in for 30 years. So some people during COVID, they got 3% interest rate, it locked in for 30 years in US. But now you buy a property, 8%, you are locked in 30 years, 8%. So I think Singapore buyers are very, very sensitive to interest rate. The interest rate is related to FOMO or fear factor. Now, of course, like 1.75, if we see 1.5, 1.4, I think the FOMO is going to be even more extreme, right? Like
1.4,
people,
1.5, we are like recycling back to 8 years ago. Yeah. That kind of interest rate where, nobody is talking about interest rate concern at that point in time, because it has always been a long time since the 2009. It has been 1%. We slowly creep up to 1.2 plus, 1.4 plus. Then 1.5 is like the standard kind of thing. Yeah.
And then when interest rates are low, people would love to lock in at a fixed rate. I mean, like fixed package to just lock in for 2-3 years. I think when that happens, and let's say if price escalate too much, what do you think about new cooling measures?
Price escalate too much? How define what is considered too much?
Example, let's say the headlines for every launch is always like 90%, then price increase. If the government would come with a new set of cooling measures because of this FOMO, what do you think that will be?
Well, I need to let me digest.
If you are the government, bit. What will you do?
Yeah.
Because I think this question will get more and more common. Like, and I also think like, for example,
how would that impact your decision? Whether you know or like try to predict what is the potential next cooling measure?
Okay, so for example, in the past when we had low interest rate environment, then let's say if I'm an investor, maybe I'm still like taking my time to go and think about, should I buy now or buy later and all that. But then maybe by the time I finish considering, the cooling measure is out. So I think if we study the trends of behavior, because even though our government try to keep the price growth very gradually, they're also worried that if price escalate too much, it becomes like escalation where it's very hard to claw back. They will try to structure in some cooling measures. And of course, I think they are also careful not to kill the market.
I guess I understand where you're coming from.
So where I'm coming from is that if I'm an investor and I already know maybe that is somewhere down the horizon, then all the more I should really take advantage of the low interest rate now, really analyze and then make like a deadline to my investment, like quickly get into the market. rather than waiting for.
Okay. I think right, I don't have such a question in my mind because usually when clients come and they work with me, they make decisions very fast because I give him enough data and frameworks. Because at the end of the day, if we need a long time to make decision, right, it's because we are afraid, we are concerned that we are buying the wrong thing. So most of my clients execute really, like it's within a month. Yeah, so sometimes we see a launch, we are only focusing to go and see like one good launch and then we execute already. Even 2 days ago, I just collected a check. I'm working with a buyer to buy a resale property. Investor. We only see one unit. And then we close on that unit.
Right.
Yeah. So it's things like that. So if you know how to hunt for the correct deals and the data will apparently tell you that this is from a data standpoint, it is just a good value. You will already have incentive to want to execute and not wait.
Yeah. What is your advice for buyers that have like analysis paralysis? Because for example, let's say some people, they are really worried about missing out on the next launch that they really like in terms of the site. I'll give an example. A lot of people are waiting for Thomson View now. But it's not going to launch this year. It's going to launch next year. I think it's a fantastic project. I love the plot.
Location is great.
Yeah, I mean, you seldom get this plot. I mean, it comes from en bloc.
Yes.
But then, let's say, touch wood, by the time you wait, and now let's say somebody can take action.
Okay, this is very easy to solve. So you are saying that if I want to wait, what's my strategy? Is it?
No, so for example, somebody that firstly, they analyze and they get paralyzed. Secondly is of course, because of a hopeful product that they are waiting for, maybe 9 to 12 months down the road. And by the time they waited, then let's say a new cooling measure came in.
My advice to all my clients is never to wait for something to come on board. Because there are so many things that can change. If the market is doing well, the developers can launch at a higher pricing because of the sentiments of the market, right? If the market is negative, there's more cooling measure, it makes it harder to execute. Maybe I can buy today, but with the new cooling measure, maybe now is instead of 25% down, maybe I'm 30% down payment. Because my budget shrunk. So maybe I can't buy anymore, or maybe from a 3-bedder, now I have to buy a 2-bedder. So it's always execute based on certainty, right? So you don't want to lose the bird in your hand in the hopes of like, I don't know what's the phrase, but generally it's like, don't wait for too long unless you are a very specific audience. You want that location, like your parents are already there. Okay, then you have to wait, no choice. But if you are investor, there is no reason to be emotional and work for a specific launch. Because I think from our data, we've seen many times, right, that yes, location is important. Location helps you to determine whether is it a good property or not. But a good property do not equate to a good investment. Only with the right pricing, with the right exit audience, that will make it a good investment that allow you to exit well. There is target audience. That's why your price can increase because you enter at the correct pricing, right? So as long as that is met, because for most of my investors, they just want to make the money work. So they have no emotions. I choose the unit number for them. They leave the entire decision to me. And they have no stress.
Very good point you make there, Rong. So maybe I summarize into this triangle.
Yes.
So I always share that there's this like triangle of decision. So what you have mentioned just now, let me summarize for our audience. So sometimes to avoid analysis paralysis, and of course we are coming from an investor point of view. Of course, if this is something like your spare change, right? Or you really love that location and product, then by all means. But if you're coming from an investor perspective, there's always 3 risks that's involved. The first risk is macro risk. I mean, now that interest rate has already came down and it's going to go down in the very short term, in the next quarter, then there is a macro advantage for you to take advantage. For example, 1.5%. You will never know what's going to happen next year, right? Maybe next year it's going to jack up back to 2.5% and you lost this entry advantage for a low interest rate to lock in for 2 to 3 years. Number 2, there's always micro risk. What is micro risk? Because of this, let's say, for example, all the launches start to do very well over the next 9 months, and this launch that you have been waiting for the next 9 to 12 months has to be launched at a price that, for example, that is a very, very aggressive price. And then you face micro risk. And of course, what you mentioned is the third risk is yourself. Because, for example, what if Now you could actually lock in because you're on a salary package of $25,000 per month. But what if next year you lose your job? I'm not saying from the perspective of maintaining your loan. Maybe you have some savings, CPF or whatever it is, but the entry depends on your current income, right? And you could have already signed the LO. And we always share with our clients, okay, but if worst come to worst, you can sell the property in 4 years' time. You can rent out the property, but then your entry opportunity gets affected because your age, your income, your TDSR, and of course, like,
your liquidity might change also because sometimes, you know, like you are currently the amount of liquid funds is at X amount that you can sell and deploy. But maybe because you wait, maybe there was a market pullback on where you have parked your funds, whether is it in crypto, whether is it in the stock market. Then you realize that the budget and affordability might change also.
Yeah.
Right. So that's why we want to work with a balance of like a risk to reward ratio. Usually a good investment strategy is we think about how do we minimize the risk and the upside will take care of itself. Because as long as we take care of the risk and you know that the reward that we're going for is at least like, you know, like 3 times more than the risk that we're undertaking, then it makes it very comfortable to execute on.
Yeah. Yeah. Let's have a look at all these launches over here. So, and of course, like Rong has already plonked out the next table on this few bullet points on the timeline updates. Maybe bring us through a little bit. What do you think about all these launches that's coming in the next few months?
Okay, so I think next one coming up, it already launched already, actually. It's Artisan. I mean, based on today, it's okay. But anyway, this you're not going to have a lot of traction because it's a smaller project. As in, like, you won't hear it on the news platform. Right? From a developer standpoint,
only micro location levels.
Yeah, micro location level. And of course, developers don't have to throw in so much, right? You know, social media advertising, bring in all the big agencies because they need to move 500 units, for example. But if you love the Xinmin area, you're like the Thomson area, then I think you automatically will already know about the launch. You will execute on it. But I think what a lot of people are probably expecting and looking forward to is like, for example, Penrith. Because the last time there was a Queenstown launch that was in Sterling Residences. Sterling Residences was the pre-COVID era. So it has been at least 5-6 years there's no launch over there. And always been a very popular location, just outside of the CBD. Skye at Holland. I think Holland has usually, you know, like it's a very nice, kind of like lifestyle location, especially with now like the One Holland Village, the new mall. If you have pets, you will love that mall. There's a favorite mall for pet lovers, very pet friendly. The entire Holland landscape is transforming. So that will definitely be something that's attractive as well. So if you look at the next few slides, you will actually see the Skye at Holland land bid prices versus, you see lower, okay, down, this one. Right, so you can see that Skye at Holland, the land price, 1285 PSF, done in 2024. This is 31% lower than One Holland Village Residences just right beside, where the land price was done at 1,888 lah. But of course, there is a mixed development. You have the resi component, shopping, service apartment, etc., and all that stuff. So it is always a good sign to know that the land bid price is attractive. But of course, doesn't mean that developers buy low, they will sell low. But we can always hope. You know, so when I think if you are waiting for a launch to come by, I think it's okay to wait for something that's going to come in 1 or 2 months. But don't wait for something that is going to come half year later, especially not 1 year later. Because opportunity cost, I think the uncertainty that you can buy something good to hopefully you can buy something perfect. Yeah. You might not even have a good enough queue number. Yeah. Yeah. But of course, there's one way to beat the odds lah. So if you're buying a new launch, and you want to make sure that you definitely get a unit and you love the project, before you wait for the launch to happen, make sure that you go to your first tier of your family, your father, your parents, your sister and all that, right? Maybe you all are both in a position to get a unit each. Then you can give yourself the opportunity to buy earlier, 1 day earlier under bulk purchase, where you are 99%, you'll be able to get the most availability the units, only whether you want to buy or not.
Yeah, even how bad your queue number is.
Yeah. So there was one case study that we know, right? So what happened is, after analyzing the project so good, originally only want to buy under husband's name first. Then the wife will buy something else. Then both buy the same project. So husband buy only, wife buy the same project, bulk purchase. 100% you can get the unit. Yeah. And that project was sold 99%. That was Emerald or Katong last year. Yeah. So because there are a lot of people that miss out Emerald or Katong, And because after Emerald Katong, they missed out already. Then they noticed that Continuum is a very good project. Then 100 units moved in 2 days. When Continuum was there all along, it's like, like the hidden gem that nobody is looking at.
Right.
So sometimes the spillover effect is very strong.
What do you think of this project, Penrith?
Okay, I think in terms of the overall location, it's nice. I would say that generally, if you were to compare with all the past launches, like you're probably slightly further away to the MRT station, but I think it's still pretty close, 300 meters around there. So I think it's going to do well still. Anyway, Queenstown have a very strong attraction factor. You have one of the estate with the highest $1 million homes.
There's a lot of profit from all the HDB upgraders.
Yeah. So if you talk about District 3, which is predominantly Queenstown, Red Hill and Tiong Bahru. So technically speaking, Queenstown, I think overall the private properties have the best profitability out of all the supply based on past performance. So I think that definitely helps in terms of it being investable.
Yep.
But of course, we still have to see what's the final price that's being launched. Then we can make a decision whether is it a good investment. It's a good property.
Yeah.
But we're not sure whether it's going to be a good investment.
Yep.
But based on land pricing, 1154, very, very good pricing. This is only 9.5% higher than Sterling Residence's land price. And that was done 7 years ago. So you know that less than 10% over a 7-year period, they got at a good land price. So we can always look forward to it.
Right. How about let's look at this.
That's the Zen.
This one, what do you forecast will be the launch price?
They have to sell at least 3,000. I mean, you're at CCR. All the CCR launches is averagely 3,003 this year. The only one that has the lowest average is 3,001, which is River Green. That's why they sold 88%.
Yeah.
So it will definitely be 3,000 PSF. But understanding that this is a harmonized project, right? Harmonized project, when you don't have, it will on paper, your PSF will look higher, but you can always deduct like a 5% away from the harmonized PSF to compare with what we call like the non-harmonized projects. Yeah. Because those PSF are lower because they are bigger size, because the aircon latch is included inside. Yes. So they have a fair comparison. Then as long as you minus off already, it is usually we say within a 10% range, new launch versus resale, right? We go for the new launch if the factors are extremely similar. Yes. If you have less than 5% spread, this one is like a no-brainer.
Right. What you mentioned just now about it doesn't mean that the developer bid lower. Yeah. They will sell a lower PSF. Maybe share with us this example. Like they actually bid higher, but the launch PSF was lower than this PSF.
Sorry, again, what's the question?
I mean, just now you mentioned a very good point. It doesn't mean, for example, Skye Holland, developer bid 1,002. Yep. It means they have to sell cheap. Yep. Yeah. As naturally as like a business,
you want to maximize your profit margin. You're trying to find a sweet spot.
Yeah. So when was launched, their land bid price was 1,514. River Green, they bidded lower, but of course they still achieved 3,001 on average. But this one, when it was launched, it's all below 3,000, right? So it's an example, it is actually like them pegging to the current market.
But of course, you also need to take into consideration that was non-harmonized, River Green is harmonized. Yeah. And of course, River Green went to the direction of making very effective layouts. So when your layout is effective, you do have more leeway to sell at higher PSF because overall price quantum is still going to be attractive. Yeah.
Because everybody will be focused on the quantum.
Yeah. But I think now developers have been, after I think so many years, right, of going through new launches where it had very tepid on low sales. And then I think nowadays developers are pricing their units very well, pricing their units in a strategy that is positioned well to achieve a high sales rate. Yeah. So that they can lock in most of their revenue and then they can have the cash flow to go and bid the next piece of land. It's a better business, right? So I think it's good for the business itself. It's also good for the audience.
I think, you look at all this round, right? Yep. Example, like this entire round. I mean, for example, Springleaf that has done very well. This was the only bid, right? The only bid, and they bid at 904. I think this happened in an era whereby the sentiment was really like a bit more conservative because we had 11 rounds of rate hikes. So developers back then, they were also a little bit cautious, like where is the market going? Yep. Started a bit low and treat. And I think like that has resulted in sort of like an advantage plus the harmonization that resulted in today. Maybe let's talk a little bit about this one. What do you think about this one that has already been launched?
Canberra Crescent. Okay, Canberra Crescent, their land bid price is similar to an EC land bid price, right? So that I clearly like put it there. So of course, just by it having such a low land bid price, this is the only project that is under $2,000 per square feet. We haven't, that you can find units under $2,000 per square feet. It's been, I cannot remember the last time. I can remember a launch that is under $2,000 per square feet. It's been some time already. So definitely, I think for people who, because of the lower per square feet, right, it allows you to enter at a lower price quantum. So yeah, we were just talking, 4-bedder, this is probably the lowest price quantum for a 4-bedder you can find a new launch. You can find units at under $2.3 million. And if you want to stay in a new township in the northern area, Canberra is a very new township. Most of the houses and the private properties are done in the last 8 to 10 years. Yeah, so everything you see is new over there. And they have anchored very nicely all the development such that you are seeing either the landed properties in front of you or you are actually seeing the empty plot at the bottom. So this is a education plot reserve, education plot below. Very unlikely they will create any school. Like, even if they create any school, it's probably like 6 stories high. So if you're on a higher floor unit, you definitely have a nice distance to the next building. And most of their units do not face the opposite HDB. So I think like they plan it very well. So you can see there is a small part where there is the small part over there. They make it the entire thing the facility deck.
Let's say if somebody asks your advice, like they're not buying this for own stay, they don't mind buying anywhere. And their quantum is about 2.5 million. They can buy a 3-bedder or 4-bedder. Would you recommend them for this? Like, what's your honest opinion in the investment point of view? And their goal is that, okay, after 4 years, you want to sell.
But because we don't know when the audience is going to see it, right? The price will change tremendously. So if it's 2.5 million, previously what we executed on was Springleaf. Yeah, so Springleaf, we got like a 4-bedder, 110 meters to the MRT station. You are in a private enclave, closer to the city center. So that definitely has a little bit more upside lah. And knowing the developer being Guaco has a track record of trying to do township developments. So I'm pretty sure that they will beat the next piece of land. So just imagine that if you have a developer that plays the long game, and you buy the project, right, you are very highly profitable if you choose the correct unit type and the good pricing. Of course, cannot be all the units within the development will be highly profitable just because of the price spread and disparity that the developer has introduced. So for example, right, when you have a developer that wants to play like the township games, like Monopoly like that, if he goes in and bid the next piece of land, there will only be 2 scenarios. Scenario 1, he got the piece of land. So he has price control. Right? He's not trying to compete with his own development. Even if Springleaf did not sell, let's say like 88%, they can still, have price control. They can angle the theme to be different. So that is very apparent in the Lentor series. So every Lentor series for Guaco, they have a unique positioning. All right. So that's number 1. Second thing is you realize that even if they do not get the building, it's okay. It just means that there was another developer that is more aggressive, that reach a higher record pricing, and then you are also safe by buying Springleaf. Because now you know that the price is right to the next project is even higher. So I think whichever scenario, I think from investment standpoint, I always share that the investment strategy is like you must increase your odds of winning. I hear a lot of people's strategy is that they need the market to happen in a certain way for their investment to pan out. And if that's going to be the case, your risk is very high. Right, so if you can think of in a different scenario, okay, let's say if the market goes up, of course, most people will make money. But what if the market comes down? If the market stays stagnant, does my choice still allow me to have good chance of profitability? So if you can answer that question properly, then I think it is a very safe way to deploy your funds.
And of course, like for Springleaf, what we were sharing with our audience at the seminar that we did before the launch was that, of course, for those of you who is like not hard up on location, let's say for example, you're comparing between Canberra and Springleaf. We talk about the fact that, okay, do you want to be the first project here? Potentially in the sea of future 14 projects, because maybe in future, Springleaf area is going to have another 14 developments. Or do you want to be the 14th development in the existing zone in Canberra that already has about 13 projects already. So there's a fundamental difference there. Second point is that now that the developers other developers have seen like the performance here, like 92% sell out within a weekend. Naturally speaking, the next plot, which is a mixed D, I think people are going to be more aggressive. There's going to be more bidders. And let's say Guaco wants to participate in this, they will also come in and they will also want to make sure that if they really have that township plan, they themselves might be a little bit more aggressive as well. And naturally speaking, if let's say the entry, for example, is 1,002 PPR, then all the people that bought Springleaf technically has won already in a sense. Yeah. So this kind of like an advantage, and especially if that launch is done well and now there's still balance units, I think that there's a clear advantage of like really entering at this phase, right? So there's a multitude of factors over here. Maybe share like what is your forecast before we end, right, for 2026? Like where do you think after this whole chunk of so-called launches are being launched, this whole chunk here, of course, the previous slide was the launches that has already been launched.
Yes.
Where do you think will be the pricing for 2026? Because now, if you look at this, basically, EC is the only one that is below 2,000. Canberra is the only one slightly $20 below 2,000. Where do you think will be the new benchmark in 2026 and 2027 for OCR, RCR, CCR?
OCR will have to be on averagely $2,300, $2,400. You know, like RCR will be 2,700, 2,800. CCR easily will be maybe like CCR. I think will still maintain around $3,300. Yeah, so I think like the real price benchmark will move for OCR and RCR areas. Because I think still between OCR and CCR there is still quite a gap. Sorry, the RCR and CCR is already still quite a gap. I think next year you'll probably start to see RCR that some RCR maybe will cross $3,000 per square feet.
And then OCR will move up tier to 2,500.
Yeah.
Bare minimum. Right?
Depends on which part of OCR. For example, like Lorong Chuan part of OCR is already 2,500 already. Yeah. Right? Because OCR is a very easily mistaken kind of segment because OCR
is so big.
Is so broad, right? So I think you can classify OCR into 3 different segments. First tier, second tier, and third tier, right? First tier is your OCR is equivalent to like an RCR location. So these are like your Clementi. These are like your Lorong Chuan. You will expect that their selling price is very close to a city fringe kind of pricing because they do not have really too big of a difference on location. Then you have the mid-tier, like tier 2 kind of OCR location like your Springleaf. You are not all the way until the end. So you are somewhere in between. And of course, you have the true OCR like your Pongo, your Canberra, your Woodlands area. So these will form the baseline. And we know that the baseline is at 2,000. It will share at 2,001. The mid-tier one will eventually reach 2,003. The first tier of the OCR will be 2,600. I won't even be surprised that in areas where the last launch was 8-10 years ago, you can hit $2,700 per square feet. Right? Then you will see that RCR will be at high 2,800s to 2,900. Some will break 3,000. It's very sought after. So in that case, I think CCR will still maintain around 3,000. I'm not so aggressive on CCR location at the moment for pricing standpoint, just based on absorption rate.
Yeah, and I think the developers will be very focused to really clear their stock in the CCR region. So OCR by natural kind of like a movement, it will definitely still do well. I mean, they price it correctly. But I think this might be the last era this year that we will see like sub $2,500 for OCR. Yeah, so of course, if you are ready to like make a decision, of course, you can always get in touch with Rong, get in touch with our team, and we can always sit down on a one-to-one consultation with you. And Rong, any final advice before we end the podcast?
Invest well, take care of the downside. And I think remember Warren Buffett's first rule when investing, never lose money. Second rule is never forget rule number 1. The first time I read it, I understand it from a theoretical standpoint. Okay. And after that, I still made a lot of financial mistakes that in different instruments that I lost money. Until I finally understood what I meant. If I'm going to take a risk that is disproportionate to the amount of reward I'm getting, right? Just because I only thought about the upside. And because of that, I made a bad decision and lose money. Then what's the point of investing in the first place? I will just keep it in the bank, even though it does not beat inflation, but at least it has retained the capital rather than losing money, right? So I have now now integrated this wisdom and really applying it for my clients, for myself, right? We really want to just limit our downside risk. And then this has made it very sustainable. And the track record of my client has been extremely well so far.
All right, awesome. We'll see you on the next podcast episode.
See you.
Bye.